Well, it's a top-down beat coming in from HCL Tech, a stellar show on all parameters really, because if you look at the top-line growth itself, in terms of constant currency, the revenue has jumped up by 3.8% versus our expectation of 3% growth. Solid growth coming in rupee terms as well, with an uptick of 5.2%, and that compares with our expectation of 3.5% growth. The dollar revenue growth has also jumped up by 1.9%. We were expecting the dollar revenue will jump by around 0.8%, so a good beat coming in terms of the dollar revenue growth as well. The biggest surprise for me this time around positively is the fact that margins have improved considerably. Now, margins have improved 93 basis points on a sequential basis to 18%, and this is despite the effect of the salary hikes that the company has taken, and this is almost 60 basis points higher than what the street is expecting. And perhaps that's the reason the company has also narrowed its margin guidance for the full year to 18 to 19% versus 18 to 20%. Now, the company had said earlier that they're looking at achieving the lower end of the range, but the street will now take heart from the fact that the company has gone back to that 18% mark, and this will be really important to track. Secondly, if you look at the internals as well, in terms of deal wins, it's actually improved on a quarter-on-quarter basis. The deal win momentum this time around was $2.4 billion. Even in terms of net addition, the company has hired the net addition to the tune of around 8,359, and that compares with net addition of just 2,000 last time. And that tells you perhaps the lead indicators of growth, which is headcount addition as well as deal win momentum, that continues to be really strong. And perhaps that's the reason the company has gone ahead and increased their full year FY23 revenue guidance to 13.5 to 14.5% growth versus 12 to 14% growth that they had earlier anticipated.